How to get your affairs in order simply. This is a package of 14 spreadsheets designed for the various types of assets you can own. You copy the spreadsheet out of the package and into a file together with the scanned documents that relate to that asset. If they're all there in the one file, the linking of the documents will be very easy. And of course, you need to copy it because you might have more than one class of assets. So for example, if you had a few different types of shares, you need to duplicate the share spreadsheet for each type of share that you have. It allows you to dividend reinvest, tracks the lot. So this one here is the main residence spreadsheet. I really want to encourage you to keep your main residence exemption spreadsheet because you can lose your main residence exemption very, very easily. Don't assume you'll always have it. If you demolish the home, you lose it retrospectively going right back to the day you bought it. Same with if you sell while you're living overseas, if you die while living overseas for more than 6 years. Also, you lose it in part if you rent it out for too long, or if it was rented when you first bought it and then you moved into it. Further, the main residence exemption only covers up to 2 hectares. So if you're on a large block, there's going to be part of the property that's subject to capital gains tax too. Now, you wouldn't just use this spreadsheet in that case. There is a spreadsheet particularly for properties on more than 2 hectares. But this one, I'm keeping it simple to what most people would experience. So you can see there's a few instructions here. It's only asking you for the basic stuff you'll know, date you first lived there. It's very important about keeping this information here because in the event of your death, people can access it. And that's what this is designed. It's twofold. It's one for you to keep your affairs in order, keep your accounting fees down. If you ever have to sell the asset, you've got all the stuff there for your accountant to calculate the capital gain. But it's also a way of locking away the information that your executor is going to need, because if they don't have it, the onus of proof is on the taxpayer. The tax man is going to be a major beneficiary of your estate if they can't get this information. So please do it. There's even a spreadsheet for keeping all that little bits and pieces, like scan in a copy of your birth certificate and your marriage certificate, put in all your passwords, bank account details, address of your solicitor, where your will is, you name it. It's all there. It's not complicated, but it's a good prompt to remind you of what you need to get together and the ability to scan in the documents that are needed. So you can see there's basic instructions here, but over here in the other spreadsheet goes into a detail of instructions. But it's not complicated. Capital gains tax is complicated. You need your accountant to really work out the fine print. What this spreadsheet does is ask you for all the information that's needed to get the best outcome. The information that they might say, oh, well, no, this property will cover with the main residence exemption, not this one. Or, they can work it out. It's all there. It's locked away forever because you copy it. You put it up on a cloud. You give copies to your relatives, to your accountant, whatever, and then can't fade, can't be burnt. It's there, electronic version of everything. So how do you link in the documents? So this is the main data entry part for the receipts. As you can see, I've already put the purchase price in of the property. Then let's say we've got, now with your main residence exemption, holding costs are a field day. So basically that can include anything that's associated with the property that you haven't otherwise been able to claim as a tax deduction. It's even cleaning materials. You could keep your Woolies dockets here. It's lawnmower fuel, anything. It's repairs and maintenance, but also it includes interest, rates, insurance, all that for the whole time you're there. So you can see a little bit of exposure because you rented the property out at the start. It can be really, really eradicated by just increasing the cost base, because the way the formula works is you calculate the whole capital gain for the whole period of time. And then you take the percentage that it's exposed. So receipts for the time you did live there actually reduce the capital gain for the time you didn't. So we go up here to insert and we go on link. And previously I scanned this spreadsheet into a directory with a scanned document. So I'm going to click on that document and that'll put it in the spreadsheet. I don't know why it scrolled down a bit, but back up we go. It did it because I hadn't clicked on. Try again, insert, link, and there's the document. Okay, and there goes the link. So if it wasn't for the limitations of a Zoom recording, I could then, if the ATO ever came along and asked, I could then click on that and the document would appear on the screen, and the ATO, just like the cartoon said, can go away and cry. So you'd put the amount in here as holding costs, the date and that sort of stuff. And you can see here your total changes to take all this into account. And it also comes down over here. Now, this bit over here to the left is where you can estimate your capital gains tax liability. So be keeping all these records and you think, well, I think I might want to sell my home and move somewhere else, but can I afford to buy in the new place after I paid my capital gains tax? Because for the first 100 days I own the property, I'd use it as a rental. So days not covered with your main residence exemption, 100, maybe you owned it for a whole 1,000, and that means 10% of the gain is exposed to capital gains tax. Let's say you think you might get 500,000 for it, but it's going to cost you 10,000 to sell. And there it is. So 10% of that gain is that. 50% discount means you're going to be taxable on $6,997. You put in your tax bracket there, and or the person whose name the house is on, it might be, if it's husband and wife, you might average out your two brackets. So one might be 45 cents a dollar, one might be 30 cents a dollar. Add the two together and divide by 2, put that in there. And that'll tell you likely capital gains tax. So that's what you've got to go off and buy a new place for and pay stamp duty. So it's costly. But also you can see this also tells you what your heir would get after because they inherit your capital gains tax liability unless you were living in the house when you died. If you are, then they inherited a market value at date of death as the cost base. But assuming you moved into another house or something like that, this house will give them a $2,000 tax bill if their tax rate's 30 cents in the dollar. So that means they're only, after they pay selling costs, going to get $487 out of your estate, $1,000 out of your estate, whereas you might give your other child $500,000 cash and they get more than the other child. So it helps you work out what's reasonably fair. It's not exact. Don't expect it to get exactly right, but it's certainly a good attempt. What's most important is getting this exact, getting all the documents in here. Mind you, every line you can add is an improvement. Sure, you mightn't have kept your Woolies dockets, but you can going forward, and they're in there. Anything you can do. Anyway, that's all. There's a good nagging there in the instructions on that. I can't encourage you enough that it's the life, you will make your executor's life much easier. You will make your life much easier, and how good it will feel to have all your affairs in order, in there, copied. It's worth the effort because it's not complicated. It's just a little bit time consuming. So thank you, and I hope it gives you the peace it gives me to get it all done. Keep that tax man out of your estate.